Hello everyone, welcome to the Macro Cafe. It is Saturday morning here in Chicago. We are on the 4th of February and we have quite a few charts to go over today. I am your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. All right, well, thanks everybody for joining, and we'll jump over and take a look at the charts. I have, interesting things to show you today in the Macro Cafe, but I do want to take care of a few house items first before I get started. First of all, here is my Twitter handle at Elliott Cafe. Go ahead and follow me here if you are not doing so already. I'm trying to stay up to date here with information every single day about the markets, trades, things I'm watching, things I'm doing. I think you're going to find benefit in following me up here. Also, I want to introduce you to my newsletter here that's called The Pigeon and the Statue. And every single week, I'm doing a strong pigeon report where I take a look at the strongest markets, at the trends from US equities to ETFs, the macro list, and I provide commentary on kind of what I'm watching, what I think it's the best. There are opportunities in here as well. So this is the third report I've done. The fourth one is going to come later this evening or into tomorrow morning. So it's an important, 4 or 5 minute read where you can get a quick glance at what's happening across the markets overall. And I think you'll find it, pretty beneficial. The last thing I wanted to do is to take you up here to my Telegram room. This is my private trading channel, where if you want to come and be part of my trading group, you can take a trial. It's a free 30-day trial. It's required with a credit card, but you can cancel anytime you want prior to those 30 days. No problem. Just, let me know. I think you can even cancel it without the bot. There's a link below this video that will take you to this Elliott Wave Cafe bot, and then you can choose. There is a monthly membership. There is a yearly one as well that's much cheaper. With the yearly membership, you have access to a 7-hour video course with all the PDFs. And that course is actually, right here. It's 35 minutes, 32 minutes. So I think it's got 10 parts. You can also download all these PDFs for a quick access, with everything that I talk about in the videos, with the slides and everything. So this is part of the yearly membership. I also have a stock channel where I provide all kind of alerts and interesting things that I'm watching in terms of charts, stocks, ETFs, trades I'm taking, a lot of things that I find interesting, and I kind of alert my members to that. Then we have an altcoin channel, a Bitcoin channel, regular market updates every single morning at 5-6 a.m. I'm jumping on the charts and providing intraday analysis from the SP500 to the NatGas, Bitcoin. We're taking a look at pretty much all the important markets, the dollar, gold, silver, everything else. So there's a chat room. So go ahead and give that a try if you want. For 30 days, it is free. All right, let's jump and take a look at what I want to talk about today. And we'll go ahead and also follow some of the counts that I have. I've done also a midweek update, I think, on Wednesday, where I took a look in detail at some of these markets that we're watching, but this is the regular kind of weekly review. So I wanted to start by kind of showing the performance since the beginning of the year of this main asset classes. So Bitcoin is still up about 41% year to date, outperforming all the asset classes here by a large margin. The S&P 500 is up about 8%. Followed by TLT, so we got some bond performance there at about 7.4%. Gold, especially with the sell-off that we have had on Thursday and Friday, has lost a little bit from a 6-7% gain down to 2%. The dollar index, it's starting to push a little bit to the upside in here. I think we're coming into the end of this decline, and we're beginning a correction that's probably going to last here, probably a couple of months at least in the dollar. And then the USO, which is the oil markets, have been a complete outperformer this year, underperformer. It's been enjoying, pretty nice performance for the past couple of years here, but the markets have been kind of coming down. I'm talking about the energy markets in general, not necessarily just the oil. All right, so this is kind of where we are on that. Let's take a look also quickly at the sectors. Performance year to date in here, if you take a look, there's a lot of movement into the discretionary sector, especially communication services, up about almost 14% year to date, followed by technology. So there is a move towards risk assets, and has been happening for the month of January. It's pretty visible in all the charts, and people have been dumping their defensive posture from energy to staples, healthcare, and utilities, and kind of starting to fly into more, let's say, a little bit of real estate. And this is the performance actually against the SP 500. If you take them off, you will see that individually they're making even a larger move. So communication services 21%, discretionary 17%. You have some financials here, they're still kind of lagging, but materials and industrials as well. So a lot of movement towards offense. You see, a lot of rallies into these meme stocks, high beta assets, momentum trades. Everything seems to be being light here in terms of risk. We'll see how much will that continue. I think there's still probably going to be an outperformance here from these classes up into March, and then we'll probably get a little bit of a pullback, and then maybe drop again maybe in May before we start to move to the upside again. Shorter term here, I'll show you, I think we're a little bit frothy. We might get a little bit of a pullback, but overall I think this positive trend can continue into the month of March. Let's take a quick look. There's a lot of charts that look like this. This is Microsoft. We have a lot of just charts that are looking pretty bullish. A lot of stocks and ETFs that are making 52-week highs. That list continues to increase. So underneath the surface, there is a lot of bullish momentum. So the indices might not really reflect that entirely, especially the Dow Jones in here that is kind of stalling, but the rest of the markets are acting pretty well. So let's take a look at our macro list on the weekly. This is something that I review every single week, and I'm looking from a pure trend momentum price action perspective with some moving averages and just kind of clean candlestick formations. I'm seeing the S&P 500 PPO moving into the positive territory. This is a very bullish sign. We have some strong weekly closes in here above some of these key moving averages. We're overtaking some of the swing highs. The next one is going to be at about 43,100. We'll talk about the counts in here, in a little while. But overall, the picture here continues to look pretty okay. I mean, you're starting to make a higher high, higher low type of a move, which is indicative of the beginning of an uptrend. The RSI is starting to push higher. The NASDAQ had a pretty strong weekly close, a little bit of a pullback on Friday. It was normal. We had a very strong job report of about 512,000 jobs. But I mean, the signs are, the ISM, I think, was looking okay, trying to come back. So the discussion is it about the soft landing, about, the rates where we are. I don't want to get a lot into that. There's a lot of other guys that follow that closely, but the bottom line is, is the Fed going to be able to kind of hit two birds with one stone, basically, reduce inflation and also try to provide some kind of a soft landing without getting the economy into a big recession, and also, for the asset prices to continue to move, for the real estate not to crash, and, kind of everybody's happy on all fronts. We'll see how that's going to be here over the next couple of months. Take a look at the NASDAQ composite, which is very similar in here. You can see the AD line. It's starting to break to the upside along with the PPO. Dow Jones has been flat. It's above the key moving averages, but I do see it continuing to the upside as well. I think this is a small flat formation. I'm allowing it for a little bit of a wave too, but not too much. I think, if you're putting like a fib between this low and this high and you're finding a 61.8, you want to stay above those levels, and that could continue to lead to the upside. The idea that this was an ABC flat, it's starting to fall apart because based on that count, we should have already sold lower, and when those expectations are not met, it's time to think the other way. IWM, again, with a very strong close. This is one of the best performing markets as well. If you look at the Russell 2000, a lot of these stocks are looking pretty well. And again, it's very tough to kind of count this on the bearish side. You would have to come up with some very ingenious Elliott wave counts to look at this move as a wave, some kind of a wave 1. Then you'll have a WX, maybe another ABC, or wave 1 finishing back here, with some kind of an expanding diagonal. So you have to do all kind of, I think, Elliott wave gymnastics to try to stay bearish here. And I think when that happens, it becomes a little bit forced. So I would continue to try to stay and respect the fact that the market has been turning after unsuccessfully trying to break lower multiple times, and it's time to give it the benefit of the doubt to the upside in here for as long as it can go. Obviously, there's going to be signs if the markets are clearing back a few of these other levels. We reserve the right to change our mind and just kind of flip back. But for right now, I don't want to fight a market that is looking like it wants to break further to the upside. Bitcoin in here looks pretty well. It's been stalling in here. I think it will underperform a little bit some of the alts, maybe some of these other markets, because it's into some important resistance zones. It's been having a long third wave. I'll take a look at some counts, but it's sitting below some key moving averages as well. So I think over the next couple of weeks, it's still not going to be able to create any large momentum. At the moment, it's just kind of consolidating. TLT has been pushing higher. I do have a larger count. I don't want to talk about it into this video, but we're looking for probably a fourth wave that will continue to unfold for another maybe couple of months on the yields in here, kind of sideways along with the bonds to the upside. Dollar index has been into a pretty strong decline since September 28th of last year. It's the first time that we're getting a pretty aggressive reaction from this almost 100 lows back in here. Previous resistance became support, and I think we're beginning to correct to the upside again. Probably for a couple of months in here, the dollar should push higher. You saw a big reaction from the gold market as well, and probably we'll try to get back towards 104, 105 for this initial advance, and then probably a B wave and then another C to the upside. This should probably pause a little bit on the risk assets, continue to push gold. Maybe those commodities will get hurt a little bit too on a little bit of a dollar spike in here. But it's probably just going to be shortly lived before we begin the next leg lower, because I think this could be a pretty important top in the US dollar. So I'm talking about this also into that pigeon report and with my members every single morning into the updates. We've been waiting for this reversal in here for a couple of weeks because the dollar really wasn't going anywhere. So that kind of helped us prepare into shorting gold and getting ourselves into some good positions with GDX, with the gold miners, and even gold futures and GLD via options and stuff like that. So it's a market that can help you kind of gauge the overall health of some other trends. Here is gold kind of pushing back. This was another kind of rally that we've been watching, and we noticed the non-confirmation from the silver market, and I continue to talk to my members every day about that. I said, listen, I think gold it's running on fumes in here. It's hitting resistance. There is important fib projections and retracement zones in here that are getting hit. With the fact that silver is not able to climb, with the fact that the dollar is approaching lows, there is a big chance that gold is probably going to start crashing. So we've had a pretty good move here over Thursday and Friday, and this week is not looking that pretty. So if next week they're able to kind of climb back a little bit, maybe back towards 1900, I think there'll be another shorting opportunity, because I think gold is going to come back towards 1800, 1820 in this initial leg, and then we'll continue to watch. I have some counts in gold that I can show you in a little while. Copper has been pulling back as well. Crude oil not able to rally, just a simple ABC. I think this market is probably prone to get back towards 65, maybe even 60. So that's that. The emerging markets here and EFA are taking a little bit of a pause here with increasing the dollar. So expect slight pullbacks in these markets as well. And then VIX is still sitting at important support in here, trying to close back above this 18 level. and we'll see. If we're going to notice a strong week next week with a bullish close, then it's probably time to reduce risk exposure on some of these markets. A couple of things I wanted to show you quickly. It's the breadth here, new highs versus new lows in all the markets. This dotted line show you basically the beginning of 2023, and since then, in the New York Stock Exchange common stocks, you've noticed, a large increase in the new 52-week highs in here, indicative of an appetite for risk and probably an end to this, year and a half bear market, where you had a lot of red and no green almost at all. And this is the first time that we're getting an increase in this. So this is an underlying strength that's coming into this market. You can see also in the SP 500 at a smaller rate, but we're getting a lot more green shoots than red. You notice this big capitulations at 52-week lows that happened back in October 13 when we had that kind of major low in the market. The NASDAQ also very impressive in the 52-week high list as well. So this is the NASDAQ composite, continues to climb. We've had 142 stocks making 52-week highs, as much as 200 in the previous days. And then Dow Jones in here, it's a little mix. I mean, there's only 30 stocks in there, and actually, look at the Dow, right? That was the outperformance in that long rally that we've had in the Dow since mid-October, and then it kind of flattened out, and then these other markets started to pick up the momentum, and that's pretty visible. I like to watch this, every day, every week, just kind of go and see, what's happening underneath. I mean, indexes are one thing, and then I also like to watch the stocks and create scans, with 52-week highs, with important stocks that look at different industries and kind of where the appetite is, just to kind of create a comprehensive picture about the market, not just the Elliott wave counts. You gotta get additional information. All right, then the advanced decline line in the S&P 500, shows you clearly that we're about to break to new all-time highs in here before the S&P 500 actually breaks to new all-time highs. It's been a lot of accumulation in here, since October 13 lows. This is moving higher. We have broken some downtrends. So this is kind of positively moving. So far, just a 3-wave up in there, but I think it has the potential to continue to go. So this is basically shows you there's more issues advancing versus declining, which wasn't the issue, back in 2022 when this thing was kind of pointing lower. Now we're going to the upside in here. All right, a couple of other interesting things. I want to show you some ratios. So look at the XLK, technology sector, versus the total stock market. So this is the technology. I mean, it's been kind of underperforming the market since, middle of, let's say 2020, mid 2021 back in here, maybe fall of 2021, where we've kind of had a spike. Try to create a bit of a head and shoulder. Looks very similar with the Tesla, looks very similar with the Amazon, maybe even Apple stock, resembles a lot of that, but they were never really able to break this 0.64 ratio, and we're kind of sharply coming higher. We're trying to climb back above the 52-week moving average. So there's quite a resurgence in this ratio between XLK and VTI. And if you don't have a continuation of this pattern, what usually that means is that you're getting a strong move into the other direction. So pay attention to XLK and XLC, because these are two sectors that have been coming back into favor in here after they've been completely destroyed over 2021 and 2022. So that's kind of where we are on that. And then I wanted to show you the underperformance of XLE, which is a sector that I continue to be bearish on. Probably I'll be for, this year and maybe even the next year. It's been, really well performing in here, but since it hit this ratio resistance here at about 0.47, it's been losing heavily momentum through the RSI. So I'm putting the RSI on the ratios too. Why not? Because that shows you that there's a lack of strength in this ratio, and with every single move higher in here, the RSI was continuing to drop. So I think what's going to happen here, we're going to probably come back towards 0.35 and maybe even lower. There could be a fourth wave in here. But again, I would not want to be involved in XLE at the moment, by the way this ratio here kind of looks. So that's where we are on that. And I wanted to show you also kind of what's going on here. I've been showing these charts in some previous presentation. This is the consumer price index that's been coming down. I've been cautioning on that, since summer, maybe the fall of last year, that inflation will be coming down, and when it does, you're probably going to get an underperformance from the global commodity markets. CRB index is in here, and you can see this kind of gray beige areas where you've had pretty strong inflation in previous years. You've had strong rises in commodity prices. This has happened since 2020 to the end of 2022, and with inflation coming down, the commodity markets are coming lower, and I think that's pretty visible if you look in the internals of those, whatever those commodities are. They're just not looking that pretty. So that's just a reminder of this kind of correlation between the CPI and the commodity markets. And then I also want to kind of touch really quickly on UNG. I do have a count that I want to show you here shortly, but we're coming back into some massive support back here. It's one of the longs that I have in the market. I have opened UNG at about 920, 940, just a little bit higher. The market have been dropping since, but look at the volume in here. Look at this capitulation volume that's been taking place in UNG over the past week. So we haven't seen anything like that in a long time, and I think the upcoming rally will be pretty awesome. There might be a little bit more pain in here, but I've been kind of studying the markets in here, looking at some kind of previous cycles, and I think a pretty decent move back towards 9, 10, maybe even 11 is going to come over the next couple of months, and either it's going to be some kind of a fourth wave or the beginning of a larger move to the upside. So I'll talk about that, but I wanted to kind of show you what's going on with this UNG. Okay, so one more thing since I'm on this page, it's take a look at this Adani markets up here, Adani Enterprises, from India. I mean, there was a big sell-off happening. There was a report of fraud and some kind of accounting practices, stuff like that. And this market, I mean, they kind of killed this index, or this stock, whatever it is, because I think this guy's got a bunch of businesses, including in this index in here, and I think it's been the second richest man in the world, following Elon Musk, and its stock dropped to almost 1,000, followed by a pretty strong recovery in here. So I do think that this remains in a pretty big uptrend. I don't think it's a major reversal. The RSI is back towards 50-40, where it's levels where, especially on these kind of longer time frames, as you want to get involved. I think, maybe there'll be a little bit of a pause, but this could be an opportunity to kind of join back into this market. The Indian markets might have a second wave pullback in here. I'll talk about them here shortly, but I just kind of want to draw attention to this drama that's been happening. I think there was a report from Heidelberg Research, pointing to all of those issues, and that created a big sell-off in this market. So 1.68 trillion market cap. So there's no joke here. All right, let's take a look at my MotiveWave software, and we'll take a look at the SP 500. So here is the break of this line, which I think it's quite important. And now let's take a look at my counts. This is kind of, it's becoming our primary count here in my program through an ABC. And then we're beginning a climb in a wave one, a nice, I think, motive wave from these lows, pull back, break above the trend line in here, and we're going to go with a third wave in progress. That's probably going to take us to, beginning of March, middle of March, take or put up a few days, here and there. But the targets we're watching are about 44.20 here, and about 100% equality with this wave one. Any move below 4,000 is going to start to be problematic, and 3,900 in here is probably going to be a line in the sand for this move. And, we're probably going to watch the 61.8% retracement of this entire advance and use that as our guideline. to kind of keep this count in place. So this is the S&P 500. I've talked about it, towards the middle of the week in here. I'm seeing some some interesting and very, very creative wave counts from people that want to stay bearish. We were part of that gang, for a little while, until some of these patterns in here start to look like, they're not working out. And I mean, one of them now, it's that this is a 1, 2, 3, 4, 5, some kind of an expanding leading diagonal, which I find, very kind of imaginative in here. And then that this is some kind of an ABC pullback, and it's probably gonna last for 100% equality up to here, and then you're gonna be coming and you're gonna be selling off. While this looks definitely very, very interesting, I don't know how much chances of a success it really has. There are some issues with this diagonal as well. So anyway, this kind of comes to show you that when you have a little bit of a bearish bias and you want it to continue to stay bearish, you're going to find everything under the sun that kind of fits your narrative. And, which I guess it's fine, but in a way, it kind of blocks you from looking at the market with a different eye and maybe missing of, some of the things that could actually be happening underneath the surface. And one of the reasons that I say that is because, and that I show breadth and sentiment and, some of those indicators I've been talking prior, it's because those are the ones that are telling you, that this count in here is probably more appropriate than anything that's, looking on the bearish side. So, I don't have anything against that. I just don't think that should be the primary interpretation, right? So if this didn't work as a 1, 2, 1, 2, now we're going to go with, a diagonal, with the big ABC and treat, still try to stay bearish, until when? Because basically under discount, you still have a chance to be right, all the way until actually this high gets taken out, right? And by that time, you're missing a lot of this kind of uptrending move, trying to kind of fight, this to the bearish side. So that's just kind of my 2 cents on that. But again, we'll continue to watch. I mean, some of the bearish counts that we've had, one of them was this, where this is a wave A. I'm sorry, this is a WXYX, and then you're doing an A up in B and then down in C. I mean, this is becoming way too large, so I don't really like it. It's just totally disproportionate. The other one was that this is probably a 1, 2, 1, 2, which now being quite high and a little bit even disproportionate with a larger degree second wave has issues, right? And then, I guess the next one would be that this wave 1 gets shifted back here, this wave 2 gets shifted back here, and we solve the bearish problem. Well, remains to be seen, and, we'll continue to kind of watch that. I'm really curious how that's going to pan out. All right, let's take a look at the next chart in here that I have. Is a chart of gold. And I'm going to go under my green count, which is the bullish count. I have a bearish one as well, where this looks, as a C wave of a flat in an A, B. Actually, yeah, A, B, and then up in C. Both of them are fairly valid. Let me see what it is. I think it's... I'm trying to find it. I'm sorry. Yeah, it's right here, right? So this is a wave 1 and then an A, B, C. It's probable, it's possible that it could work out. I don't know how probable it is. It's a very, very large C wave. If you're going to get a lot of dollar strength and a crash in commodities and a crash in the rest of the markets, it's possible that gold can fall to the downside. That's why, this kind of 261.8 C versus A actually helped us identify, in combination with some other levels, that this could be an important high forming in here, in gold. So either one's, either this one or this one are totally fine, because they're both basically calling for a comeback down. So this would be an impulse lower followed by a second, and then a third, a fourth, and a fifth. And this one is basically just saying that you're going to get an ABC down. So if we're going with this as a primary, here's the sell-off. Here was this kind of massive breakout, and I talked to the guys in the room kind of showing this was a pretty kind of fake move. I mean, look at this, look what they did to this market, right? They pushed higher one more time right above that line, and then they trapped a bunch of excited people there, and now everybody that bought and did not have the courage to kind of get out on this bearish candle, which was telling you basically, listen, you got fooled in here, just get out. They might not give him a chance to get out until this guy gets towards 1800. So there might be a little bit of a rally back to this resistance at 1900. But this market is probably poised to continue to decline here, again back towards this support line at the minimum. That would be a wave A decline, and then we're probably going to get a B and then a C. So overall, I'm seeing a corrective price action in gold all the way until about June. So we'll continue to kind of pound this. We'll stay short on this leg, then maybe get out of our short, and then look to sell again a rally into a B wave to kind of take advantage of a wave C decline. Here's a look at the India 50 market, and I think this is my bullish count. I'm just gonna give it a chance here to upload, and that's the 1-2, just an ABC X ABC. So just let's say beautiful corrective pattern in there, followed by a wave 1 ABC. I think that's a flat in a wave 2, just an expanded flat with a sharp C wave. B wave went above the origin of the wave A, and then you had another 5 wave moving here, 1, 2, 3, 4, and 5 in a wave 1. And Indian markets have been really underperforming the rest of the emerging markets and United States and all of that. They've been kind of pulling back, but I think it's probably just going to be a second wave decline. So I'll be watching on the pullback what's happening into the 50% in here towards 17,764 and maybe 17,487. Anything below these levels, it's starting to be a little problematic and could shift back to the alternate count that says, where are you, that this could actually be an ABC B wave of a flat. All right, so anything below 61% of this rally in here starts to be problematic. And if you're starting to kind of attack these levels, then it's very likely that this was a 3-wave move. So that's kind of how I'm gauging and how I'm going to be shifting from, let's say, this kind of bullish count to more of a bearish count. For right now, it looks like this move unit could be complete. It's just a 3-wave move from the high, so there's nothing really significant yet, but I'll be watching. If you're going back above these levels, right there, 18,745, I think that this wave 1 could still be in progress. Okay, so be very careful here, because you do want to see more of a 1-2-1-2 or a 1-2-3-4-5 decline, followed by a B wave and then a C. So that's all we'll be watching. I mean, there's a big resistance. There's a big support that's coming. What is this level? Right there, right at about 18,151. So I think they're probably going to try to get all the way back here in this initial move, and then we'll continue to watch. But that's the idea, right? Right here, it's a little frothy. You can count 5 waves, so it's kind of hard to stay bullish. But if you want, and you want to continue to be bullish, I would watch this 18,144, and even a 61.8 of this last leg, right? I would not let my my stop be much below that level. This one would be kind of the ultimate 18,144 if you want to kind of stay with the uptrend. Anything below that level tells you that there's probably going to get into a bigger second wave pullback. So that's my view on India 50 at the moment, Nifty 50. So then let's take a look at the natural gas in here, and then we'll take a look at Bitcoin as well. So NatGas has been coming lower. Now I've done some analysis in here. We've been short with our members into this kind of 10 with this beautiful head and shoulder. We traded this leg lower, then we've gotten this B wave. It was just kind of an awesome pattern. I did not expect it to come down as low as it did, but here we are. And it is, let's say for right now, we're looking at it as a wave A, B down in C, which could become a wave 1, 2, 3, 4, and 5. Now, under both scenarios, you're going to get a pullback, either as a 4th wave or the beginning of, let's say, maybe a wave 1 to the upside or something like that. But I think we're running towards the end of this move, and that's been shown previously in that big volume spike last week that I showed you just prior. And then also I'm looking at the extension of this wave A. So 100% of this move comes in at about 225.45 on the NatGas, which is very, very close. We're trading 240 with a little bit of a pullback here on Friday. So that's a big zone. Then you also have an extension of this C wave versus this wave A from B wave down at 161.8, which was exactly touched, up here at about 2.31. This is a log scale, which is important on these moves. And then you also have C versus B. So the length of the C wave versus this B wave, it's 261.8 as well, which is very close. So you're getting a big cluster of support zones in here, followed by, this, along with the volume, along with the emotions associated with this decline and the capitulations and all the talks in the media regarding, like, how much of a crash we're having in natural gas and how much, let's say, some of people that long, maybe much higher, are hurting. Are pointing, let's say, to a temporary bottom in here, and we'll see what happens. All I'm looking for is for a move, maybe about 3. I would be surprised of a move all the way up to 4. But I'm looking, let's say, for the next, couple of months for the natural gas to, stabilize in here and start to reverse to the upside, and then we'll go from there. So, all right, let's take a quick look at Bitcoin before I let you go. And, this is, the move that we've gotten from the lows. Let's say that we already have a 5-wave completion with a big low here in Bitcoin at 15,400, a wave 1, a wave 2, and then this is a pretty awesome third wave. What's happening right now, it's a bit of a consolidation. Again, we haven't pulled back much. I'm not sure if wave 3 is already done and we began already the wave 4. There could be, some kind of a running triangle forming in here that could take some time. There might be some kind of a flat. There's all kind of things that, you can imagine a lot of, a lot of variations into this fourth wave that we're expecting at the moment. Bottom line is that it doesn't look like this wave 3 has a lot of juice in it, right? With a little bit of a pullback in the dollar, a little bit of a froth in the stock market, it's possible that Bitcoin, will spend, let's say, maybe the month of February consolidating, maybe even pushing lower. But if you're breaking below 22.5, I would definitely watch. Then we can secure a wave 3, I think, once you're breaking below 22.5, and then, we'll watch this trend line and kind of see how this forms. And, one additional piece of information is always this fib, pullback between, let's say the bottom of this wave 2 and the top of the wave 3, whatever that ends up being. And then we'll be watching, 38%, which is 20,854, and then anything below that starts to be problematic for a fourth. We really don't want it to break this trend line in here for this uptrend to continue to remain intact. If that happens, you're opening up all kind of other issues, and you can move back into, more of a larger picture correction in Bitcoin, or maybe even a complete reversal. There is things to talk about once those levels get taken out. But until then, I'll remain and listen to the market in here. There might be a trading opportunity once this fourth wave is over, up to the upside. So, the altcoins are doing, pretty well in here. And actually, let me take you to Ethereum Bitcoin, which I put on Twitter as well. One of the, if I can find it in here, there you are. I've been talking about this, with the members, and I posted on Twitter as well, that I think, we're getting into a period of outperformance from Ethereum versus Bitcoin, which probably will include the alts as well. That's probably going to go all the way up here to middle of March. So I'm expecting, whatever this is going to end up being, something like that. I don't know, but what I do know is that I don't think we're going to be able to crack below these levels until much later, right, for the next couple of months. So that's kind of what I'm looking in Ethereum versus Bitcoin in here. And take a look at the Twitter post that I put on that, and I'll continue to kind of try to update on that as well. Just a quick touch here. You can look at Algo. Algo, it's it's a coin that I like in here. It's basically coming back towards resistance, which is a lot of of these coins as well. they're coming back towards some, massive levels. They've broken down into this bear market and they're coming and retesting them. So, one of the clues is that, hey, if you're breaking above these, then, we have a much bigger chance to continue to go, and then that's going to be support. So, we're getting some positive behavior from this. The other one, it's Matic, I think, that's also, threatening to break this 130. I was looking at this as a correction, but, look, it's not panning out. So, you got to listen to this. And now it's a very big chance that this moves towards 150, 160 over the next, moves in here over the next few weeks. So watch this 130, and it looks like it wants to go, because once you break above 61.8, 78.6, you're going to go reverse fib of this move towards 127, 138% of this decline. And that's kind of how you judge, how strongly you can still move to the upside. And a lot of these coins that we're watching, are doing kind of similar patterns. Litecoin is acting pretty well, so we'll see. But again, I appreciate you all being here and watching. Maybe this was a bit of a long video, but please let me know your comments. Come and, again, follow me on Twitter, visit me in the Pro Room, take a 30-day trial. You got nothing to lose. Come and see what we're doing and spend time with us, chat with me, questions, charts, whatever. And, don't forget to subscribe to the Pigeon and the Statue. I'm going to have that report, a little bit later this evening or tomorrow morning. We'll see. I got some stuff to do today, but I'll fit it in. So again, thanks for watching, and I'll talk to you a bit later. Bye-bye.